What is going on, everybody? Stas here. Welcome back to another video. And yes, before you guys ask, yes, my throat's messed up. I'm a bit congested. I don't have a fever, but overall, I am a little bit sick, as you all could probably tell. But we are going to power through this video and break down 10 stocks that I'm looking at heading into this week. We also have to break down the markets, what happened last week, and kind of what I'm looking for heading into this week, a little bit of what my game plan is looking like. So if you all find value, hit the like button, subscribe, and make sure to get your free money from Moo. You get one free share of Neo guaranteed, which, by the way, that actually runs out at the end of March, so make sure to get that. And on top of that, you get up to 5 other stocks, each of which could be valued up to $3,500. Guys, it's free money. Use that link down below, deposit at least $100, and boom, you get that free money. And with that being said, let's dive into the video. So at this point, we all pretty much know, or most of us know, that the markets have been bouncing back in a pretty major way over the past, 10, 12, 14 days. You guys can see here, SPY was at about 413 on the 15th of March, and we just ended up closing the week last week at about $452 a share, meaning SPY's rallied about 9, almost 10% over the past couple of days, which is crazy. And we actually took out the highs from earlier last week at the end of last week, if that makes any sense. Yeah, that makes sense, right? You guys know what I mean. On Friday, we broke out of the highs from, I think it was Tuesday. Let's double check this. On Friday, we hit 453 in the after hours, and on Wednesday, we hit about 450, almost 451. So we completely broke out of the highs from Wednesday on Friday, which is great. And as you all can see on the 4-hour chart, it looks like SPY is trying to fill the gap to about, what was this, $458, which was the double top from February that we've talked about many times on this channel. So the fact that we broke out of 450 last week, we closed above it, and we broke out of the highs from last week in general on Friday, which is fantastic. All of these are good signs that SPY wants to fill the gap and continue pushing forward and continue this momentum that the bulls have been seeing. And pretty much everything I just said applies to Triple Q. And by the way, when you're watching this video, the futures market is open, meaning you'll be able to see where the S&P futures are trading, NASDAQ, Dow. So let me know in the comments, even though the futures market isn't the end-all be-all, futures can flip-flop overnight. In fact, they do that all the time. Let me know anyway what the futures are doing. Drop me a comment. Let me know what they're looking like. And Triple Q, like I said, pretty much everything that we said with SPY, applies here to Triple Q. Triple Q closed on a very nice note on Friday. Even though it went down, it went down 0.1% on Friday, it still did pretty well in my opinion. You all can see we broke out in the pre-market above 361. We ended up pulling back intraday on Friday. Let me show you guys this chart. We hit, again, 361 pre-market. We then pulled down to about 355, and we ended up closing off the day on a nice upswing from 355 to about almost 360 in the aftermarket session, which is a pretty nice recovery throughout the day. And the reason why this is so important is because if we go back to the 4-hour chart, Triple Q saw a big resistance at 355 over the past couple of weeks, pretty much up until last week. And the fact that we broke out on Thursday, Friday, and on Friday, like I said, we pulled back intraday and we held 355 as support and we rallied off of it, that's fantastic. That is a very good sign that bulls are buying up the dip and momentum could likely continue. That is why I personally bought TQQQ on Friday, and I actually held it through the weekend, which might be risky. It might be a bit crazy of me to do that. I'm sure you guys have done crazier things, but that's what I'm doing, and we'll see if it pays off. I could be screwed. I could lose a lot of money, but overall, if it works out my way, if TQQQ, or rather Triple Q, runs up to, let's say, 365, 368, which is the next gap here, that means this could run up another 2-3%, and TQQQ being a 3x leveraged ETF, this could run up maybe 6, 8, 9%, and that's where I will be locking in my profits. So overall, that's a breakdown on a technical basis of what's going on, and from my understanding, nothing really crazy has came out this weekend about the markets, Russia, Ukraine. I haven't really been paying close attention to it, but if something huge happened, we all would have seen it somewhere, whether it be the news, YouTube, Twitter, and personally, I haven't really seen anything. So maybe the markets this upcoming week just continue to inch up and up and up, which would be great again because maybe I'm a little bit biased, but hey, it would be great for me because I'm in TQQQ, right? So let me know your thoughts down below in the comments. Hit the like button, subscribe, and don't forget to get your free money from Moo. Again, you get 1 free share of NEO guaranteed and up to 5 other stocks. Just use that link down below, deposit at least $100, and boom, you get your money and that free share of NEO. That promo runs out at the end of March, so get on that if you haven't done so already. So let's dive into these stocks. We have 10 stocks to talk about. I don't even know how I'm going to make it through this video, guys. I have some tissues right here. I got some water. I got the Dayquil, but hey, we're going to make it happen. So stock number 1 is XPEV, and this is the Chinese competitor, electric vehicle competitor to NEO, and I guess they're also competing with Tesla, as Tesla does exist over there in China as well. So let's pull up XPEV's chart. This is XPeng. If you guys didn't know, I'm probably saying that wrong, but again, it's a competitor to NEO and Tesla and all the other EVs over there in China. This stock did not do so well on Friday. It went down about 7.5%, closed down over $2 a share. And by the looks of it, we failed breaking out last week in general above that 180 SMA on this 4-hour chart, being around 32, 31 bucks. And actually, we got to almost 30 bucks last week. And you guys can see again on Friday, we dumped down 8%. We got rejected by that 180 SMA. And it looks like the downtrend's continuing, guys. And at this point, we're really just holding above the 50 SMA by a thread. I mean, if we break under, let's say 27, we're right above 27 now. Let's say 26 bucks into the 25s. We break that 50 SMA. This could really start falling. And I'm not going to say it's going to go all the way down to the lows being about 18 bucks because that does imply we have about 30% more downside. I mean, that could happen, but overall, if we break the 50, let's just put it this way, it's not going to be good. And before I forget, this company does report earnings tomorrow on Monday, March 28th in the pre-market. I think it's 7 a.m. Central Standard Time. So keep your eyes on XPEV, guys, ticker symbol XPEV. And me personally, I'm not going to touch it until it breaks out of, let's say, 35 bucks, clearly above that 180 moving average. So I'm going to put an alert here. Mark is at or above 180. And if XPEV does anything like NEO, which I guess is why it fell, because NEO reported on Thursday, or was it, or Friday? I forget. NEO reported the stock tanked 9%. I think it was on Thursday they reported. So if XPEV does anything like NEO, it might fall even more. And again, take out that 50 SMA on the 4-hour chart, which would not be good. Another one that I'm looking at here is CHWY, ticker symbol CHWY. This is a very popular company for pets. You buy your pet food here, your cat food, dog food, this, that, the third, right? They sell a lot of things. And over the past couple of years, and really the past 1, 2, even 3 years, they've branded themselves as the go-to online place for pets. Again, for food, for, accessories, harnesses, leashes, whatever. You could buy a lot of things on CHWY, and in my opinion, they're a good company, but the stock has not been performing well, clearly. And that's not an opinion, guys. It's a fact. This stock has been getting destroyed. It was $97 back in the middle of August, and we just hit 35 bucks a couple of days ago, which means it dropped 63%. And the truth is, it's down even more than that. It's down a lot more than that because it was all the way up to 120 bucks about a year ago, back in February of 2021, which means from the all-time high, it is now down close to 70%. So take a look. CHWY, kind of like XPEV, well, I guess exactly like XPEV. It is still downtrending, well within the downtrend, right? It's not quite yet under the moving averages. In fact, it's kind of broken out of the moving averages slowly but surely on the 4-hour chart during this relief rally that the markets have been seeing. But again, overall, it's still at a lower high. It's still at a point where it might get rejected. It's actually, already getting rejected. So I'm going to put my alert at 50 bucks a share, which I think was the high from last week. So we have earnings coming up on the 29th, which is on Tuesday. If they do well, maybe we break above 50. That is where I think momentum could really start kicking in, but we're just not there yet. And again, they report earnings on Tuesday after market hours. So the next stock here is Dave & Buster's, ticker symbol PLAY. This chart looks pretty decent compared to CHWY and XPEV, right? Dave & Buster's chart looks pretty decent and went down 1.4% on Friday. And look at the volatility. Jesus, guys, look at this. Just about a month ago, 3 weeks ago, it was at $47. It dumped down all the way to 33 bucks, meaning it went down 27% in just 2-3 days. And it recovered recovered from $33, $34 now all the way to $44 rather in just the past week or two. So it's recovered 32% now. And we have earnings coming up on the 29th, Tuesday after market hours. Actually, no, this is on the 28th. We have this on the 28th, which is tomorrow, Monday after market hours. Sorry for the mistake, guys. And again, it's breaking out. It's above the moving averages. We're struggling a little bit at 45 to about 47. That's going to be a sticking point, which was resistance earlier in March before that initial big dump off. So let's see if this V-shaped recovery that we're seeing could continue. Maybe Dave & Buster's takes this $47 high out and we might start breaking out even further. Let's say if these earnings are strong, guidance is strong, compared to last year, revenues crushing it, EPS, this stock could really catch fire. The next one I'm looking at here is Micron, ticker symbol MU. Micron has been very wonky lately ever since it ran up a ton, which mind you, we actually called it out before it ran up a ton, which is why you guys got to subscribe to the channel. Before it ran up a ton, it was at 65, it ran up to about 100, and ever since it hit about $100, after that 40% run, 30-40% run, yeah, almost 50% run, geez guys, after it hit $100, that was in the beginning of 2022, the stock's been wonky. Like I said, it's kind of been flat, well, not flat, it kind of topped out at 100. It hasn't been flat, it's been all over the place. I mean, it hit $100, down to 77, right back up to 96, crashed to 68 again. That was about a 30% crash, and now we're starting to push back up to $80. And what I'm personally seeing right here is an inverse head and shoulders. Look at that. We got the left shoulder right here, we got the head right here, and then we got the right shoulder right here, heading into earnings, which are coming out on the 29th after market hours, which is Tuesday after the bell. So Micron's very beaten down. Inverse head and shoulders is playing out by the looks of it. So if we start getting above, let's say $80-$85, that's where a real reversal could occur. So I'm going to put one alert, mark is at or above 80 a share, and the next one I'm going to do right above the 180 SMA, which is at 84 a share, mark is at or above. So that's Micron. Lululemon's another one. We've talked a lot about this one. They're about to break out on the 4-hour chart. The 3-year chart on Lulu looks really good. The uptrend looks to be continuing, which is fantastic. After it saw about a 30-40% bear market, it's still down about 40%, guys, 35%. So they report earnings on Tuesday, the 29th, and I think they're aftermarket as well. Aftermarket. So I'm going to put my alert, very simple, at 335. And why 335, you may ask? That's well above the 180 SMA. That's number one on the 4-hour chart. And number two is 335 was the high point from the beginning of this month of March. So if we take out the 180 SMA and we break the highs from earlier this month, we're probably going to go to 355. That will also be a sticking point. I might as well put another alert right there. Let's do this. Mark is at or above 355. 355 was the high point from the beginning of February, also the middle of January. So I'm telling you guys, if they report good numbers, guidance, we start gaining steam above 335, 355, Lululemon will start breaking out even further at that point. And we already had a pretty good Friday. The stock went up over 1%. So let's see if that momentum could continue. Another one we are looking at, guys, is Sundial, SNDL, which, mind you, I never, ever talk about penny stocks on the channel, but now I am. The stock's 81 cents. It went up 9% on Friday. It's a MJ stock, right? We'll call it a Snoop Dogg stock, a Wiz Khalifa stock, if you guys get my drift, right? That's the type of stock it is. And we got some news on Friday or Thursday, was it, that, legalization, decriminalization of, across the, the U.S. That's what shot up all these stocks. So Sundial is reporting on, let's see here, the 29th, which is on Tuesday after the bell. And again, it's a penny stock. I don't talk about penny stocks, guys. I'm not a penny stock pumping YouTube channel. You know that at this point, or at least I hope you know that. And you got to be careful with penny stocks in general, especially MJ penny stocks like Sundial. I mean, this could literally go to zero in the next couple of months, or it could go to $2. It's very risky. It could go either way, and whichever way it does go, $2 or zero, it's going to be a wild ride. Let's just put it that way. The next stock on the list is none other than Five Below, ticker symbol FIVE, which has not been doing well. It has not been doing well at all. This stock was back in August. It was at $237, and we just hit 143 about a week ago, 2 weeks ago, meaning this stock is down 40% over the past couple of months. It's in a bear market. It's downtrending. We're under the moving averages. We had a death cross a couple couple of months ago, and it doesn't look like it's reversing. Sure, we have found a bit of support at about 155, 160, which is good. We have earnings coming up on the 30th, which is on Wednesday, I think. So hopefully earnings could shake things up. And if they do shake things up, let's say they do well with EPS, revenue, guidance, and we start gaining momentum above, honestly, I would touch this thing if it starts getting above 175. That's just a little bit above the 180 SMA on this 4-hour chart, and it's right by the highs from the beginning of February. If we take those highs out, this might be going 180, 185, 190. I'll draw some resistances here from the past couple of months. We have 195 is a big one, 187, 188 is a big one. So keep your eyes on Five Below, guys. And of course, a lot of these charts don't look fantastic, but the reason why I'm covering these stocks, guys, is because they all report earnings. And when there's earnings, there's volatility. When there's volatility, well, there's money to be made. Keep that in mind. So that's Five Below. Paychex is another one, PAYX, which I actually like. This is a stock that is doing well, technically speaking. You know, the breakout's obvious. We have a double bottom breakout, pretty much confirming the uptrend you guys can see here on the 4-hour chart. We broke above the moving averages. We're trading at a multi-month high, multi-week high as well, obviously. We're above the moving averages, and we're noticing the start of a potential golden cross, 50 crossing above the 180 SMA. So Paychex reports on Wednesday, same day as Five Below, after Mark. Actually, no, this one's before the opening bell. So they're at 8:30 a.m. Central Standard Time on Wednesday, the 30th of March. So let's see if this momentum continues. Again, it's breaking out. Chart looks great. If they do well, there's upside to about 138, 140 even, which was the high point from the end of December. And I'm not sure if that's an all-time high. Let's see here. It is, guys. It sure is an all-time high. So watch out for Paychex on this breakout. I like it. Another one we're looking at here is Best Buy, or not Best Buy. Geez, guys. BlackBerry. Does anyone else get confused with all these ticker symbols? We have BB, which is BlackBerry. BBY is Best Buy, right? And then we have BBBY, which is Bath and Body Works. There's all these BB freaking ticker symbols. It mixes me up. But this week we have BB, which is BlackBerry, which, if you guys take a look, BlackBerry's chart does not, I mean, don't get me wrong, it's in a downtrend, clearly, but it's slowly starting to reverse. It's starting to not look as bad as it once did. And check this out, guys. Check this out. Ever since the markets have been rallying the past, 10 days, 2 weeks, whatever it's been, BlackBerry's been breaking out as well. We hit about $6, a little bit under $6 in the middle of March. And since then, it's gone all the way to almost $8. Now it's in the mid-low sevens, and we're well above the moving averages now, which is great considering the last time, no joke, last time we were above these moving averages was in the end of November. So we're starting to show momentum, even though on Friday we went down a little bit, 3.4%. We're still above these moving averages. So let's see if this breakout above these moving averages could continue, maybe towards 8, 9, 10 a share. With these Wall Street bet stocks, guys, anything is possible. So the last one before we wrap this video up, guys, I don't want to bore you, and quite frankly, my freaking throat is killing me right now, so we gotta wrap this up. The last one here is AMD, Advanced Micro Devices, which all you guys on my Patreon know. I initiated a swing position in AMD last week at $119 a share. We're up a little bit on that right now. Nothing crazy. We're up about 50, 60 cents a share, which is solid, but again, nothing crazy. And this is one that I'm watching. It doesn't report earnings next week, but it does report earnings in about a month from now on the 26th of April. And I think this one's going to follow NVIDIA. It's going to do exactly what NVIDIA did. This is what my opinion is, what I believe. You guys can see NVIDIA broke out of the wedge and just completely took off last week and the week before that, I believe. So I think AMD is going to follow suit. It's slowly breaking out of the wedge itself. And if it completely breaks out like NVIDIA did, I think AMD could end up going 130, 135, maybe even a little bit higher. So I'm in this one. I'm probably going to add more, and I'm riding it out with everybody else out there holding on. So with that being said, guys, that's it. If you all found value in the video, hit the like button, subscribe, drop me a comment, join my Patreon. If you want all my buy, sells, call outs, everything else included with the Patreon is linked right down below, or you can go to StockSurfAst.com/Patreon. And don't forget to get your free money from Moomoo. You get one free share of Neo guaranteed, which runs out the end of March. And on top of that, you get up to 5 other stocks, each of which could be valued up to $3,500. It's free money, guys. Just use that link down below, deposit at least $100, and boom, you get your money. And with that being said, I'll catch you guys in the next video. Thanks for watching. As always, peace out.